Are you making these common mistakes with your rental property? Most new landlords overlook these common management points that can influence the property's success. I've spent hundreds of hours dealing with tenant issues, property management, and repairs, and I've seen all the mistakes, costs, and hidden traps that most investors never see coming. Here's the truth. I thought hiring a property manager was a waste of money until I realized how much time and money it actually saved me. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're diving into what investors get wrong about property management. Whether you're a new landlord or you've been in the game for a while, property management is one of the most critical elements of turning a rental property into a profitable investment, but it's often overlooked. Stay tuned because by the end of this episode, you'll understand how to avoid these common pitfalls and turn your rental property into a long-term profitable investment. So let's get started. Property management is one of the most critical aspects of your rental property being a profitable investment, but many landlords, especially new landlords, overlook its importance. When I first became a multifamily investor, I self-managed my own properties for 6 years, and I made many mistakes that I commonly see other investors make. Number one is overlooking the time and effort required to manage a property correctly. So underestimating tenant management. And this is a big one because new investors commonly overlook the time required for not only making repairs, but also collecting rent or collecting late rent, addressing tenants who are not following the terms of the lease, in addition to preparing units for rent, marketing apartments, and ultimately signing leases with new tenants. This can be very time consuming if you don't have a team. Number two, inaccurate financial projections. So misjudging repairs and maintenance. Rental properties, especially older rental properties, require consistent maintenance. The actual costs for repairs and maintenance are typically higher than expected. Performing thorough due diligence before purchasing a property will give the investor an accurate idea of the property's condition and what deferred maintenance needs to be addressed. Overestimating rental income and anticipating immediate returns. The rental property business is a proven business model for building long-term wealth, but it takes time to achieve significant returns. Once your property is purchased, an investor should focus on making repairs and updating units to increase rents with new tenants. After this, and only after this happens, the property will produce more income, increasing its value. Over the years, as you pay down debt and rents increase, you will start experiencing higher cash flow, property values, and a higher net worth. Dramatically cutting costs. So when I purchase properties, I will usually decrease expenses by bringing on new management and vendors, but this is not something that continually happens. Large complexes put their contract services out to bid every year. For smaller investors, maybe every once in a while, or when you notice a dramatic increase in what you pay a specific contractor, and you see that price creep, and you're like, okay, now I have to find someone else or start talking to other people and see if I can get this for a better price. And real money and wealth are made by increasing rents, not decreasing expenses. Remember, we are trying to make the properties we invest in better, more valuable properties. We don't want to become slumlords and start making all this money right away because we're just taking out all of the management and all of the repairs. We want to make the properties better, so we're going to be investing into it, but we're really taking out a lot of the fat that maybe the previous owner was paying for contract services and for vendors that maybe were overcharging them or weren't doing what they're supposed to. Both are very typical with people that have owned properties for many years. Not budgeting for vacancies. So many landlords, including myself, underestimated the cost of vacancies when I started investing. Check out episode SS207 to learn how expensive turnover really is, because you'll be amazed at what it really costs from the time that it goes vacant to the renovations, to the time it takes to rent it, and for the cost just remarketing it and renting it again. Number three is undervaluing the importance of professional management. So when you hire professional third-party property management, you are now turning the corner from landlord to investor. There is a significant difference, and investors don't manage their properties. If you have enough units and you have full-time employees to manage your properties, that is a different situation. Still, the owner is not actually managing the tenants and the property on a daily basis. They are more interested in buying properties and having regular calls to the property managers, also known as asset management. You can listen to episode SS190 to learn more about asset management. Good property management companies have a team of good people who will work to make your property more successful. And this includes handymen, contractors, leasing agents, and other third-party vendors. Typically, the rate they command from outside contractors and vendors will be less than what you would if you randomly contacted them, what I call yellow page pricing. Property managers know more about the local rental market and city than you ever will. And, they have more contacts in state departments than I've ever had as a landlord. And they know what units rent since they manage hundreds of units in your submarket. Maybe you just gave them a 20-unit building to rent. You don't really know exactly what's going on. Well, they're basing the rents and the rent increases off maybe 200 units that they have in the submarket where you're located. So you know exactly what that unit should command in rent, and they can price it accordingly. Lastly, is that property managers remove emotion from the rental business, and they aren't going to rent a vacant apartment to the first person, right? They will strictly follow the rental guidelines set by you and them when you hired them, and they won't budge late rent or forget to run background checks, make handshake deals, delay evictions, or become friends with the tenants, or maybe taking security deposits that are less than what's supposed to happen, all these type of things that happen with new investors that are really trying to rent the unit and are trying to make deals. And don't make deals in the front end, and property managers won't do that. And that's something that's really important to the success of your property. Managing properties you do not own is much easier since managers can play the I work for the owner card, which tells the tenant that they're just doing their job and have no say in the matter and cannot bend the rules. It's much different if you're managing a property that you do own and all your tenants know you own it. Now they are able to try and push you to kind of get emotional and tell you about this or that. And this is where problems really start to occur. So it's important that there's that really clear line of distinction between property owner and property manager. And the easiest way of doing that is by having a third-party professional property manager. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.